Okay. So what I will do today is, um, since uh, since we are starting from ground zero, I will give you an overview of the finance industry and the career options in finance, because a lot of young folks, they immediately after they either graduate from college or in the process of graduating, they want, yeah, I want to be in the finance industry. And what happens is that um, in many respects, um, the only thing they know about the finance industry is the stock market. Okay.
Yes,
So, but there are a whole lot of other equally exciting and equally uh, career enhancing uh, streams in the finance industry. And so it is good if you have an overview of the entire landscape, the finance industry landscape, so that it gives you an ability to make intelligent choices. Okay.
yes,
So not everybody might have an aptitude for stock market or investment banking or you know um, equity analysis, financial modeling, and everything. Not everybody has a would have an aptitude. Um, so there are other areas that are equally financially remunerative, and there is tremendous growth prospects. So one needs to be aware of what each stream in finance um, can give you. Okay, so that is what I plan to cover today, as
yes,
the basic foundation in this bridge course, so that when you ultimately start your classes, then you'll be in a better position to pick and choose where your aptitude is. Okay,
yes,
because if you don't know what all options that you have in terms of the industry, then you are lost.
yes,
Okay, as you have lots of subjects, it is not possible to be, to devote a lot of time in all the subjects. So you have to pick and choose, you have to prioritize according to where your aptitude is. That
yes,
doesn't
sir.
mean that you don't study all the subjects, but you put extra emphasis on um, certain aspects or certain courses, which ultimately will become your in areas of specialization.
I
Yeah,
get it.
yeah. So
Yes, sir.
so that is basically
Uh,
okay. You
and
may be an Einstein in your mind, but if you are not able to communicate, whether it's in the form of talking or whether it's in the form of creating a report, or whether it's creating a very succinct presentation where you summarize your ideas. See, it's easy, it's very easy to write like 10-15 pages, but it's extremely difficult to summarize those 10-15 pages in just 5 slides. So you have to put more work to summarize that and present it in about 5 slides. And there will be situations where you are making a presentation to your colleagues, or you're making a presentation to your team, your boss, on any aspect. So it is very important. One is the content, the other is the format, the way you are presenting it. Okay, that's an entirely a different subject. How do you present your ideas? Believe me, that is also very important. Your content can be excellent, but if you present it in a very boring and very drab manner, people will start falling asleep. So that's
Yes.
the objective. Okay. So let's dive in. So the questions that I hope to answer is, how will finance help you in the long term? Career options, and what are the basic requirements? Um, Generally speaking, if you choose this stream, what are the basic requirements? If you choose stream B, what are the basic requirements, etc. I mean, these are not hard and fast, but generally speaking, these are. Okay. And where are the future jobs in finance? Okay. Believe me, finance jobs will never die.
You are right, sir.
Matter whether there's a recession or there's a markets are doing excellent, there will always be finance jobs. Okay.
Yes, sir.
How and why, the next few slides will convince you. Okay. So so what is finance? I believe you can summarize it as follows. Take a moment
Okay.
to just digest this information or this picture. I'm sure you've seen this before in
Yes.
some form of the other. Okay.
Yes, sir.
So for some, financial modeling is finance. For some, auditing is finance. For some, corporate finance is finance. So for some, stock market is finance. So different people, different uh, areas are what they feel to be finance. Now, the thing is that finance is a sum total of all this,
Mm-hmm.
actually speaking, because as this elephant has a fan, it has a trunk, it has the huge legs which look like a tree, the tail looks like a rope,
Rope.
okay, and the body looks like a wall. So if you put everything, it becomes an elephant. So finance is basically a sum total of many different things. Okay, so that is something that you need to understand, and why finance is why um, choosing finance as a career will benefit. Now, tell me what this is, or what is your
Uh,
best guess of this particular environment?
Paper I can see it is like someone is presenting
Yeah, even I don't know exactly, but I think this is a boardroom.
like conference room and boardroom comes in the
Yeah,
same, right,
conference
sir?
room. And so what does that mean is that as you when you choose finance as a career, and you do well, you are diligent, and the sky is the limit, you know and so there is ample opportunity for you to you know even be in the boardroom if you choose the
Yes.
finance stream, because vast majority of CEOs in professionally managed companies come from finance background. In the human body, the blood goes right from the brain to the toes, and the blood actually takes oxygen, and brings back the bad CO2, and then it supplies the nourishment, and it takes away the waste products and everything. Similarly, the finance function in a company provides the money, and it provides the planning, the company can function. Okay, so that is the significance of the finance function, and that's what it says. A finance background allows one to have a strategic high level understanding of company performance compared to industry and its competitors. Because
Yes, sir.
last time I told you that whether it's production or marketing or any other function in the company, they need to work closely with the finance function.
Yes,
Okay,
sir.
so that's the importance of and if you are deserving, if you do well, there are tremendous chances to rise in the organization. So why do you choose finance as a career? Okay, and so basically this particular picture tells you how the finance function interacts with other functions in an organization. Okay, now here you have the CFO. Okay, CFO
Yes, sir.
means Chief Financial Officer. Okay,
Okay,
so the
yes.
CFO interacts a lot with both external people as well as internal people. Okay, now so the CFO relation. This is CFO relationship map. So the CFO interacts on a daily basis with the CEO, the board of directors, and the investors in the
Yes.
company. Okay, large investors. So, for example, LIC or certain investment banks or certain mutual funds who have invested large amount of money in the company. Okay, so these are all publicly traded companies. Okay, so so the CFO interacts very frequently and with CEO basically on a daily basis. The CFO interacts. And then outside people, lawyers, auditors, bankers, and other outsiders, for various reasons, you know, and then internally, other executives, including HR, operations, IT, sales, production, etc., and their own internal finance team members. So you see the area of influence and interaction of the
And the
CEO.
involvement of CFO with the people,
Yeah.
CFO's involvement and the
So
people.
how important the role of the CFO is?
Yes, sir.
Okay.
He plays
In
an important role in every place, actually.
so his or her influence is there in the entire company. Okay. So uh, so now what I'm going to tell you is there are four major pillars, so to speak, in the finance industry.
Okay.
Okay, so capital markets, corporate finance, audit and assurance, and advisory. Okay,
Mhm.
so um, I will explain each of it, how each of these pillars, what they are, and what is the importance in their own way. Okay, now capital markets. Now make a guess as to what this is.
Uh, okay. Like,
Room. Okay,
yes, sir.
where these are all professional investors. Like for example, big companies like you must have you heard of JP Morgan,
Yes, sir.
Merrill Lynch, then Morgan Stanley, Citibank,
HDFC.
yeah, and big investment banks and trading companies. So these are all employees of that. So they are just their job is to just buy and sell stocks, bonds, derivatives. So this is how a typical trading room looks like. So that's why it's called trading floor.
Yes, sir.
Okay. Now these are some jargons that you need to be that you will see on a daily basis, in the industry. So trading floor, dealing room, and things like that. So um, so basically, the capital markets consist of the stock, bond, and derivatives market. Okay, and what are the functions? What all things that go on in this capital markets? Securities analysis. Mind you, I didn't say equity analysis. I said securities analysis. Securities means equities, fixed income, that is equities, bonds, and derivatives market. Okay, so these are securities. So securities analysis, then asset management. Asset management, basically, these are mutual funds. Mutual funds are
Okay.
public, so they accept money from general public. Okay, or you have PMS. means portfolio management service. That is, they don't cater to the public. They don't cater to you and me, a general public. They cater to very highly sophisticated investors. Large, uh, large customers who minimum size of their investment must be like 1 crore or 5 crores or something. So okay, now risk management is a very broad term, and believe me, I mean the area of risk management is so huge that you can make a career only in risk management. And so whether for example you are trading in the stock market, and your portfolio size is, let's say, 1 lakh, there also risk management comes into the picture. Or somebody else, other company who is trading, who has like crores of money, a mutual fund who has, whose portfolio size is, assets under management is like some 100 crores. They also use risk management. And risk management, whether it's an insurance company, they also use risk management everywhere. Because risk is basically to, wherever there is uncertainty, there is risk. Okay, risk is basically uncertainty. So how do you
Yes,
cannot
yes.
eliminate risk.
Risk
Okay,
is mandatory and it plays
so
a
you
important
you
role actually.
you have to manage. Okay, you have to
Yes,
manage
yes.
risk so that it is within your desired um, range. Okay, and how do you manage it? By taking some steps. Okay, so now, I mean, the technical term is how do you hedge risk and all that. So I won't go into all those technical terms at the moment, but risk management is a very important aspect in the finance industry. So and so it comes within the capital markets industry, and then trading, stock trading. Okay, so let's say a mutual fund, they have decided they want to buy, I don't know, HDFC stock. Okay, so then they will
Mhm.
contact their chosen trading firm, and then they will place the order, and then the that firm will find the most beneficial price. Okay, and there are techniques to do that. Okay, so that trading also comes within capital markets. Okay, then what do you do? Not only stocks, bonds, derivatives, commodities. Commodities means currency. You can trade currencies. You can trade oil. In fact, even cocoa. Then you have copper, aluminum, non-ferrous metals, or steel, things like that. Even your jeera, your dhania, all these things are traded in the commodities market. And in India now, commodities trading is becoming very huge. Okay, and so a lot of people make a lot of money in commodities market. As I said, currency, and then there are other instruments that you can trade and you can invest in, and you can, become a large investor, or you can join a firm which does trading in all these. So this is basically capital markets. Okay,
Okay.
then you have investment banking. Okay, so this is the most sort of glamorous aspect of finance industry. Everybody wants to become an investment banker, but then it's no easy thing. You have to spend years, uh, doing grunt work before you can even dream of, you know, uh, becoming not a full-fledged investment banker, but a very junior investment banker. Because investment banking requires, one, of course, knowledge about the subject. It requires you to be a It's basically a sales job. So you have to convince a client, you have to convince a company, you know, to basically most of the job functions in investment banking is you are helping a company go public, like IPO.
Okay.
Okay, so now if, for example, um, Zomato, they became public. So Zomato took the help of, I don't know, maybe Kotak Mahindra Bank or Axis Bank, or so they prepared all the necessary requirements to so that Zomato can come to the public market to float their stock. Okay, so and then investment banking also covers. So, for example, a company which is already public, or not necessarily a company is public, they want to raise money for working capital or for capex, for capital expenditure. They want to put in a new factory, so they go to an investment bank, and they give them this mandate saying that, I want to raise so much of money and it is for this purpose, and what is the best way to raise money.
So the
And there
same
are
thing
the
like private bank, like private companies also do the
Yeah,
same
yeah,
thing.
even private companies. So it doesn't
But
matter.
more public companies does, but
No,
private
not
is also a
necessarily. No,
part
I
of
would
the invest.
I would say more private companies.
Oh, more private
Yeah, more private
companies
companies.
does. Okay.
They because private public companies generally find it a little easier to raise money.
Okay.
Okay,
Yes,
because
yes.
there are various ways in which they can raise money. They can issue more stock.
Okay.
They can raise money from the general public by issuing more stock, or they can do a rights issue, or they can go to. You heard of Kingfisher? The Kingfisher raised money many years ago. They raised money by borrowing, by taking out a loan from
Mm-hmm.
a group of 10 banks.
10 banks.
Okay,
Okay.
from a group of 10 banks. So that is the consortium, that is a group, the lending group. So a
Okay.
group of 10 banks got together and they lent money to Kingfisher. Now, who was the
Kingfisher.
middleman? Who arranged for this? Is an investment bank. That is one of
Okay.
the roles. ITC, in Cocoa Bar, ITC is not there in Cocoa Bars. These protein bars. Okay. Now recently they
Yes,
found a
sir.
company who is doing very well in protein bars. So ITC board decided that, rather than ITC starting this protein bar business from scratch, and
Mm-hmm.
putting in a lot of money and all that, why not buy another company which has already gone, has done that, and who is doing well and who has a good market share. Okay,
Okay.
so then ITC will contact an investment bank, and then they will say, you see, we want to buy such and such company, and we want to buy a company who is growing,
Mm-hmm.
and whose size is this and whose products are this. So this investment bank will go out and they will search. They will
Okay.
shortlist some 2 3 companies, and then they will approach them, and then if any of those companies agree to the initial agreement, if they agree, yes, we are willing to talk further. Okay, then they do the analysis. They will look at the balance sheet, income statement, cash flow statement, and then they will prepare a valuation. They will try to value the target company. Okay,
Okay.
and then they will look at various other aspects like risk. What is the credit rating of the company? How is their distribution? What are the
And
product range? What are
And
the
how is the product running in the market and the
Ah,
world
not,
market and
yeah,
yes.
not, how is the product running in the market? What new products they are thinking of? All those things. So, and then they will prepare a report,
Okay.
and then they will come to ITC and they will say, see, we have shortlisted two, three companies, and this is the report for each of these
Okay.
companies. And then they will say, this is our recommendation based on
Okay.
our analysis. So then the ITC will they will do an internal analysis, and then they will select the most optimal one, and so ITC board will review that report, and then they will say, okay, we are willing to talk to this person, this company, and then negotiations will start.
Okay.
Okay. Now, obviously, the company which wants to sell itself will ask for the highest price.
Yes, sir.
Uh, But ITC will want to ask for the lowest price. Okay. So then the
Yes, sir.
negotiation comes, and then agree to somewhere in the middle. Okay. And then
Okay.
once it is done, then the actual work starts. How that means that how do you integrate the two companies? Because the target and the acquirer will be entirely different, in the sense that their internal operations are different. So, for example, ITC may be using SAP, the other company may be using some other systems, and then the culture may be different. Then, there are a lot of legal aspects that are, all. So the acquisition, it has to follow certain guidelines set up by RBI, set up by SEBI. SEBI is Securities and Exchange Board of India. uh, so there are
Okay.
rules. So then the lawyers will get into the picture, and they will ensure that everything is done by the book, and then the systems operations people will come together, and then they will say, okay, how do I integrate the target company into my company? So for example,
Mhm.
the target company is very strong in south. Okay, now ITC may already have a very good distribution network. So
Okay.
how do we integrate the target company's dealers into my ITC company dealership?
Mhm.
Okay, so like that. So there's a huge amount of work involved. Okay, so then so all this is done by the investment bank.
Sorry, a small doubt I have. Like now the ITC would make like they'll make a contract and make a merge company, or they'll totally convert the company into ITC. How will
Ah,
they work with?
so there are two aspects. One is, if it is an acquisition, then
Okay.
it will absorb the target into ITC.
Okay, it will observe. Okay,
Ah,
target into
if it
ITC.
is a merger,
Okay.
that means that it is a merger of equals.
Okay. Yes, they need to equalize to the ITC company and they need to work.
Yeah, it may so happen that let's say the target is also a publicly traded company. Okay, so
Okay.
the target company will have investors, big investors, small investors. So the target company, in their board, in their annual general meeting, where all investors are there, they will put up this proposal saying that we will be this ITC is going to,
Starting
we need
soon to
approval,
merge.
we need shareholder approval, so that ITC can buy a majority of our company.
Okay.
Now, there are two options. One is ITC basically buys a majority of the target,
Okay.
okay, while the target is operating as a standalone entity. Okay, but
Mm-hmm.
ITC has 50, more than 50% of the target company share.
Okay.
Okay, but the target company is as it is. It is, its stock is being traded and it has its investors and whatnot. So that is one option. The other option is ITC will buy all of the shares of the target company.
Okay, there are two chances. The ITC would buy a minimum shares or whole shares. There would be a
Majority,
two chances.
ITC will
Yeah,
buy
majority.
majority of the target company shares.
I get it. I understand. Sir,
Okay.
will I like when ITC make it this big decision, will it go sometimes like it may go wrong also, right, sir? So
Yeah,
what
there is a
about that
chance.
at that time?
There is a chance, and in fact, if you look at like 25, 30 years worth of history, very few mergers, acquisitions have really given
Positive
positive
market.
value to shareholders.
Okay.
Very few, and
I
because it is no joke. you know,
yes, sir.
there's too many uncertainties. There are too many conflicting characteristics of two companies. But that is not to say that M&A don't work. M&A does work. Okay, but then you have to choose. You have to choose the right reason. Okay, and you have to be prepared beforehand. You have to be prepared, and there also risk management comes into the picture. So there's merger
Yes,
risk
yes.
or M&A risk. Okay, so all this is very interesting, and you can spend a lifetime in in this and still just scratch the surface. Okay, so that is basically one is so capital raising, M&A, then advising customers on internal operations. Okay, investment banks also do this. Okay, so then you have brokerage.
Okay.
So brokerage is like your Kotak is a broker, or Zerodha is a broker, Grow is a broker. So these are all retail brokers who help investors trade.
Help us investors to trade. Okay.
Okay, so these are of course they do some other they provide some other services, but basically they are this. They provide access to uh, trading.
Like they would
Well, I
okay.
invest in stocks.
Okay.
Okay, now I can't directly access the stock market. Otherwise, you go through a broker.
Okay.
You have um, like Zerodha. You heard low cost
Okay.
discount broker, because
Okay.
when you put a buy order, Zerodha will take that and it will directly through electronic means it will place your order on the exchange, and then you can buy and sell. So that is basically
Like
brokerage,
okay.
and
So
all the
what are
brokerage
this
is
no brokerage?
brokerage. So this is basically capital markets. Okay. Now, what is the background of a securities analyst?
Okay.
Okay, who is a securities analyst? Okay,
Mm-hmm.
so one who does research on companies. Okay, one who analyzes companies. Okay, and provides an unbiased opinion on the future prospects. Okay, now how one does research? There are many ways in which one can do. One is fundamental research or fundamental analysis. The other is quantitative research or quantitative analysis. And you have a mix of both. Okay, so if you become an equity analyst or a bond analyst, then uh, you use your financial statement analysis, whatever you have studied and what your knowledge, and you break down the financial statements of what the company has published, and then you use your intuition, then your innovative thinking, and you come up with a report, okay, that says, okay, next financial year I am projecting that the company is going to make so much money. It is it's going to have so much revenue, sales growth will be so much, then operating margin will be so much, it will earn net profit, and so this next financial year the stock price will be so much. Who is the audience of this? The audience of this is the investing public. So for example, if I've invested in ITC, okay, my hard earned money I have put, and I have, for example, 100 shares of ITC. Now I would like to know next year how ITC will do, whether it is going to perform badly or whether it is going to perform well, whether its stock price is going to go up or down, or according to what my philosophy is. Let's say I'm a long term investor, so I am not bothered by what happens next year or in the next 2 years. I'm only interested what happens 5 years from now, what are the prospects. Okay. Now so I will be looking for analysis, which is provided by leading and well-respected securities analysts. Okay. Now, who are these analysts? They all work for, for example, HDFC. So they have securities wing. For
Okay.
example, HDFC Securities, ICICI Securities, then Axis Bank. All these banks have securities division. Okay, and then Kotak Securities, like that. Okay, so there you have the equity analysts who their job is just to look at publicly traded companies and analyze the performance of those companies. Of when I was in the US, I know of people who have been following the same company for 15 years, or a group of 4 or 5 companies. Okay, so they are, for example, the telecom analyst or banking analyst. Uh, you work as a securities analyst for a few years, then you become a portfolio manager, then you are able to manage your own portfolio. Okay, your own mutual fund you are able to manage. Okay, so what is most important is the unbiased opinion, because your clients are the investing public. Who is the audience? The audience of your reports is the retail and institutional investors. So for example, I am LIC. Okay, now I want to buy ITC stock. So then I will look at various reports regarding ITC stock. I will look at what HDFC Securities guy is saying. I will look at what ICICI Securities guy is saying, and then I will do my own analysis. So LIC is an institutional investor. Okay, and let's say another thing is the mutual fund. A mutual fund XYZ is an institutional investor, whereas LIC and some other
LIC
mutual fund, but
mutual fund.
typically they trade, they invest in lakhs, if not crores.
Okay. Okay.
Okay, whereas you and I, we trade in a few thousands.
Okay. So we become the retail
Yeah,
investors
we are
and
retail. Okay, so the audience for this research is retail and institutional investors, and the company management also. The securities analyst applies sound financial theory. I mean, he does not pluck out of thin air.
Okay.
Okay, so sound financial theory and industry standard principles and techniques to value companies. So
Okay.
valuation comes handy here. Okay, and so always you look at future. In stock market, past is not a indicator of future performance. You must have heard this umpteen number of times. All that a investor is interested is in what is the company going to do in the future. Future means next quarter or next year
Or
or
next
next
financial
two
year.
years or 5 years,
Oh,
things like that. Okay.
okay.
Okay. And then industry standard principles. You can go off and do your own thing, and if the if it is not accepted in the industry as one of the standard ways of valuing a company, it is useless. Nobody will look at you. Okay, so
Okay.
for example, discount. There is something called discounted cash flow analysis. There is something like peer ratio analysis, things like that, and so these are all industry standard principles of how you value a company. Okay, okay. So, uh, so what is the background of a securities analyst? Typical background. Okay, this is what it is. I mean, they don't need to be an Einstein. Okay, BCom. I know of people who have just done their BCom. Okay, but they have worked hard and they have learned on a continuous basis, and they have now they are doing very well. The most common preferred thing is MBA in finance, and then CFA. Or I know of people who are also done their economics majors, or even BSc maths,
And
stats, and all
stats.
that. Because a lot of the evaluation techniques is
Mhm.
highly numerical, quantitative. Okay, and so once you learn the finance theory, you can combine that with your quantitative skills, and that will become a very good plus point for you. Okay, so this background, so you can be a securities analyst, you can be an industry analyst, you can be a sector analyst, you can be a country analyst, you can be a global macro analyst, or you can be a credit analyst. For example, if you are looking at ITC,
Okay.
obviously there are other companies also which are in the same industry. For example, Unilever, Hindustan Unilever, Nestle, then Marico, then Dabur, then you have various other similar companies. So that's an industry. Okay, industry meaning FMCG.
I get it.
Okay, industry and sector also. So they are related. So sector is slightly above industry. Two, three industries together make a sector, and then
Okay.
various sectors put together is a country analyst. So if I'm managing a global fund, global mutual
Okay.
fund, so I need to know whether I should invest in China or whether I should invest in India or in Southeast Asia or in the US. So that's what a country analyst does. Okay, then global macro is basically where, let's say, in interest rates. So, for example, US raises interest rates. What is the effect of that across the world? Which countries are going to be affected? That's the global macro. Okay, and then credit analyst. Credit analysis. You've heard of Standard and Poor's, S&P. You've heard of Moody's. So these are credit
Sorry, sir.
rating agencies. So
Okay.
what they do is they rate companies. Now, what is
Okay.
that rating? That means that higher rating or lower rating. A higher rating means For example, I'm lending to you, okay,
Okay.
or you go to HDFC Bank and you borrow money. You say that I want a home loan
Okay.
of, let's say, 50 lakhs, and so first they will look at your credit rating. Okay. Now,
Okay.
credit rating, what does it do? It tells the lender, okay, what is your ability to pay them
Okay. So,
back.
so the credit answers would be the credit score in the zone.
Yes. So the credit score is a numerical representation of your ability to pay back the loan.
Okay.
So if your credit score is high, that means that you have a good track record.
Yes, sir.
Okay, and so if you have a good track record, then maybe they will charge you less interest.
Okay.
Yeah, because risk is less.
Okay.
Okay, so for example, you join a bank, you get into the credit department. That's all you'll be doing.
Okay.
There are certain models. There are certain Excel spreadsheets and certain models which feed in some information. For example, if you're a salaried employee, so how much your salary is, how much your take home is, what other, if you have any other loan, or you have any other liquid cash, what assets you have, what liabilities you have, all of those things are fed into the model, and then it calculates a credit score.
I
Okay.
get it. I understood.
And so if your credit score is low, that means that they either don't give you the loan or they charge high interest. So investment banking, as I said, it's a round the clock resource for corporates and very rich individuals and families. And there are lots of divisions within the investment bank. They perform a lot of services. Okay, there are three main this things: sales, client servicing, and operations.
Okay.
Investment banking sales is basically, they you hunt for companies which you want to make an acquisition, or basically you're selling the services, your services. Okay. So basically, you approach the companies and ask them, whether do you want to raise money, or whether you want to do a merger or acquisition and things like that. So sales is that, and then client servicing. So once the uh, client says yes, I want to make an acquisition, then you take on. From there, you take on. Operations is after the merger or after the acquisition takes place, the nitty-gritty of the work, so operations, legal, HR, all of things you coordinate. Okay, so these are three main functions of an investment bank. Okay, so uh, then as an investment banking analyst, you get an outside view of how companies plan for and acquire and utilize the capital. Okay, and these are all dominated by top tier, in companies, and there are also some mid level companies catering to a wide cross section. Okay, even if I'm a startup, okay, and I want to go public, then I take the help of an investment bank. Or I'm a mid-sized company and I want to raise money for my working capital. Then I look for an investment bank who can help me raise money. Okay, or I'm a huge company like ITC, where or Reliance, for example, uh, and I want to raise money from outside India, because it may be that uh, if I raise money from US, my interest rate payment might be less. than if I raise it from within India. So
Mm.
that's that. And then, so as I said, facilities, mergers and acquisitions, handholds for IPO, advice on change in corporate structure. Okay. Then different types of fundraising, public fundraising, like IPO, private fundraising. As I said, you raise money through a group of private investors. You can either raise money by issuing equity or debt. Or debt means basically you issue a bond. You raise you raise you take a loan, whether it is from the general investing public or from a group of private companies or private individuals. So all this the investment bank will provide you. So same similarly, it's like with the BCom, MBA finance, CA econ, also law and chartered accountant.
Yeah.
Okay, and even IT, uh, even if you know IT, you can be in the operations department of an investment bank. And nowadays, finance is going so fast towards technology. So finance and technology are merging together like crazy. So all of these people, all of these skill sets are required for your in investment banking. Okay. So for example, investment banking, sales, data analyst, business analyst, client relationship, legal, valuation modeling, and financial statement analysis. So all of this is required, in an investment bank. Investment banking today is 99% based on technology platforms. Nothing is, writing on piece of paper and all that. Everything is on technology platforms. And you run models, Excel-based analytical frameworks. And if you are a techie with finance information, you are a hot talent. Brokerage. So brokerage, you can either be a retail broker or an institutional broker. So for example, retail, of course, is if I am trading and I want to buy like 100 shares, then I go through a retail broker. Okay, and these are all online. There is no lifting the phone and talking to them and say, I want to buy. That was all 20 years ago. And so everything I just place an order on my laptop, and it is automatically routed to the exchange through the broker, through the retail broker. Now, however, if I'm a mutual fund, and I want to place an order for 1 lakh shares of ITC. Okay, then I go through an institutional broker, because the institutional broker will provide me with the absolute minimum price, because they are there right on the exchange. They have access to the exchange. Okay, so and speed and time also matters. So they immediately place the order within nanoseconds, and then they provide liquidity to traders to execute their trades. And these are technical terms that at this moment you don't need to know, because you're just getting exposed to this. So brokerage helps a investor find a seller. If I'm a buyer, and then I place my order saying that I want to buy 100 shares, or I want to buy 1 lakh shares of ITC, the broker finds a seller, because there has to be a seller who will sell those stocks to me, isn't it? If there is no seller, then I cannot buy
Yes,
anything. So that
yes,
is
I
the broker finds a seller and he matches the buyer and seller at the right price, and the broker takes a commission. It's like your mortgage broker, like your house broker.
agree.
Okay.
So, sir, I have a small doubt. So, a small doubt, sir. Like some people give a like a spam call type and they call and ask like there is a company, so do you want to invest this all? So those people would be the industrial brokers.
Um, they are a different kind of broker. They are not they are not a broker. Uh, it's not like a stock market. Stock. They are not stock broker.
Okay, they're normal broker type.
They are they help companies raise finance. They help companies raise funds. Okay, so they are in the finance industry, but they are a different kind. They are not a stockbroker, of course, and they perform the role of an investment banker. There are some who only match. For example, uh, I'm an investor. I have a lot of money, and so I want to invest in a startup. Okay, so then you have this broker. Um, they just match investors with startups. Okay, and there are some who only do the matching. That's all, and then they collect their commission. But there are full service brokers who basically not only do the matching but also take on the rest of the responsibilities. Okay, they help in the negotiation. Like for example, I have 1 crore. I want to invest in this startup. So how much of equity stake I want in this company? Whether I want 5% or 10% of the company. So they help in this negotiation. And after that, once it is agreed, then they draw out all the term sheet, the legal aspects, and everything, and then the entire transaction they help. So these are full service versus
Yes.
the person or company who only does the matching introduction. Okay, so that the retail, the stockbroker does this, and so they also act as market makers. So if there is no seller, if I want to buy and if there is no seller, then these brokers also have in their own account, they have these certain number of stocks, because they provide that, because it is in their interest that the money keeps flowing. So they provide out of their own account. So they are called market makers. Okay, and yeah, for professional and institutional traders, they provide instant execution of a trade, because these are all technology based, and as I said, they have immediate access to the exchange. So they provide, because time is of essence. So if it takes like 5 seconds between the time you initiate an order and between let's say I want to buy ITC at I don't know, I mean, for 410 rupees. So if I initiate, by the time the order is executed, ITC may have gone up to 412. Okay, and if I'm buying 1 lakh shares, then I lose the opportunity of 2 rupees in each stock, isn't it? So
Yes.
the brokers, institutional brokers, provide instant execution.
Okay.
Okay, and they're all technology enabled with high speed interfaces to the exchange. Okay, so brokers also provide like free brokerage reports. They also lend money to investors and things like that. So every large financial service firm will have a brokerage division along with an investment bank. So, for example, Kotak. Kotak has a brokerage division, they have an investment banking division, they have a bank. So the same, similarly, HDFC, Axis Bank, all of these companies, they have divisions across all these functions. Okay. And as I said, there are low cost discount brokers like Zerodha, 5 Paisa, Angel One, etc. Full service brokers are Axis, HDFC. It's a kind of what is the kind of service you want. If you want hand holding, if you are just entering into the stock market and you want complete end to end, you want service, then probably you need to go to a full service broker. And whereas if you already have some idea and you are looking at cost, then you go to a discount broker. Okay. So similarly, it's the same thing. So brokerage profile is BCom or IT. IT is important. You if you are a technology guy, then brokerage is a good area uh, because everything is technology based in a brokerage firm. Okay. So similarly is same thing. Risk management is a very important aspect. Okay, data analysts and client relationships, etc. Okay, technology based, and believe me, there's a lot of competition. Okay, so now we come to corporate finance. Okay,